Launched almost 20 years ago in June 2006, Skyline Apartment REIT today has a total asset value of over $5.2 billion, delivering 19,813 mid-market apartment units across 227 properties in 48 secondary or tertiary markets in 6 provinces. Skyline Apartment REIT today is one of the largest, if not the largest, private multi-residential REIT in Canada. Plenty of noise in the market today with private to public, public to private, liquidity risks, oversupply in major cities as a result of the bottom falling out of the condo market, population estimates declining in major cities, and compression on market rents. Since inception, Skyline Apartment REIT's strategy has been to focus on stable and growing secondary and tertiary markets that are less prone to transient tendencies and therefore embedded with stability. On March 23rd of this year, the asset management team disposed of 3 assets comprising 678 suites in the Moncton, New Brunswick area for over $122 million, marking an exit from this community. On the other side, in April of this year, the asset management team will be acquiring 2 assets comprising over 300 suites for over $125 million in Stratford, Ontario and Mascouche, Quebec, further expanding its holdings in these communities. Skyline delivers mid-market rentals with a current average in-place rent of approximately $1,600 per suite. The estimated current mark-to-market gap on this portfolio is approximately $260 per suite. This gap represents what the average market rent would be for Skyline's portfolio if it were all renewed today. What does this mean for an investor? If this mark-to-market gap, approximately $260, was captured today and capped at the portfolio's implied rate of 5.2%, the resulting portfolio's fair market value would see an increase of approximately $1.2 billion, or equivalent to $15 per REIT unit. With an average annual turnover rate of 22%, we estimate that over the next 8 to 10 years, this embedded unrealized gain could be surfaced. Ongoing asset management sees a further 880 suites under development for acquisition into the apartment REIT, amid further pruning the portfolio of approximately 500 further suites. Additionally, through refinancing, it is estimated that in 2026, approximately $220 million of equity will be surfaced for redeployment. Lots of activity from an asset management perspective in the short, mid, and long term, with a strong positive outlook for Skyline Apartment REIT and its strategy to focus on mid-market apartment rentals in secondary and tertiary markets. Investing in housing across the country brings investor, geographic, demographic, and microeconomic diversification to this investment offering. Skyline Apartment REIT should continue to be a long-term hold in your portfolio with a lean towards long-term capital appreciation while delivering stable and predictable monthly distributions.